all three of which have been filled. So we can then use these areas as, attractive for price, and give us our targets along with various other factors that I'm going to talk you through today. But once these are filled, then we have to assume that the trend bullish is probably going to continue. Okay. Good morning, team. Hope you're all well. Today, I'm going to talk you through my trade of the week from last week. First trading week of January. It was actually a pretty good week, to be fair. Did about 7% on the accounts, which is amazing, really. I wasn't expecting to trade that much, but there was loads of really good opportunities. We had a great news day on the Friday, NFP day as well, which I'll talk you through in another video. But today, I'm going to talk through my trade of the week. It was fantastic, really clean. Really happy with how it played out. Now, as always, if you haven't done so already, please make sure you're subscribed to the channel, and hopefully see you again soon. So this is the trade that I took. It was on the dollar Swiss, and it was actually a counter trend play. When we have these big kind of impulsive bullish moves here, although that does create a new trend, very clearly we've broken major structures here, and that's great to see. Really what we can also look for is a retracement, okay? Because this, pretty much all of this, I'll mark these all out individually, but this really is on a higher time frame, one big imbalance. All of these here, these imbalances, when we've had these big impulses, we really need them to be filled. And you can see how magnetic it is to price. If you look at this move up here and how prices come in, basically filled all of that imbalance before pushing up again, you can see how it attracts price to retest. And then obviously, we've then started rejecting here. I'm just going to play it on just a little bit to see what happens, see whether it blows or whether it rejects again. Yeah, so you can see that basically price has had this big impulse. I think this was news related. I'll be honest, I can't remember off the top of my head. But then we've left these three imbalances, all three of which have been filled. So we can then use these areas as, attractive for price, and give us our targets along with various other factors that I'm going to talk you through today. But once these are filled, then we have to assume that the trend bullish is probably going to continue. Okay, so I'll talk you through exactly how I took it. So we obviously had this big bullish move up, and it took out multiple structures. So I'm talking all of these highs. So we had this trend line liquidity here. All of these were taken. Okay, as you can see, this big bullish move took all of this liquidity. And what we also had is this sweep of these weekly areas. You can see that first one, this is why I use this indicator here. It's the only indicator really that I use. I wouldn't really class it as an indicator because it just draws daily and weekly highs and lows. But look at that. Price has literally taken out that weekly high and then rejected. That's why we've got that wick. If I drop down to a 5-minute time frame, you can see it took out that weekly high, then rejected. So we can use these areas as targets. We can also use these as manipulation points. And what I'm looking for here is, once we've had these big pushes, I'm looking for a reason to go bearish. Now, a lot of you might have seen this push down and been like, right, okay, well, we've had this push down, we've had this change of character, as some people call it, or break of structure, as I call it, in a kind of counter trend direction. But for me, that's not enough. We're still sat above these weekly highs, and these weekly areas, once they're broken, they have a very good chance of acting as support for price to move up. The only real kind of support and resistance that I will trade are these daily and weekly highs and lows. So for me, it wasn't quite ready yet. So I held on. Okay, you can see prices pushed down further. Okay, and we've taken out this imbalance. We've filled basically all of this imbalance. There's a few pips there, but you can see that most of the orders that would have been sat in here for buys have now been triggered, and that's why prices reacted and pushed up like here. And I did take an initial trade from this supply zone. I think I took it like this, something like this. I can't remember off the top of my head, but something like this. As you can see, price blew through it. Okay, took me out. Now, for me, I'm still very confident on this trade. I still know that we've had this initiation to push down, and we've got all of this imbalance below. So I was happy to take maybe a slightly higher risk entry, okay? I was still confident that we would push down. Now, what you could have done to refine this is waited for some sort of structure like this. You know, ideally, you'd have had a push down and then a retest. We didn't really get that. So the reason why my entry worked is because it was higher risk. And once you've got these confluences in your favor, you know, we've got big push up, loads of imbalance, we've broken the weekly high, then broken back within the weekly high. This gives me a good indication that sellers are still quite strong. It is a counter trend play, as you can see. And you know, my targets were here for the first target, which is a 2R, and then here down here for a 5R, because once these imbalances have been filled, especially this big area, the trade is pretty much done. There's not much left in it. I think I took about 80% off somewhere in here, and then I let the rest run. And as you can see, price then had some nice initiation and moved all the way down and took our final imbalance zone. And you can see imbalance filled, and then price starts obviously mucking about and pushing back up. So there's a couple of reasons to set this target, not just the imbalances, but also you can see here we've got this daily support, and look, that old daily level, okay, which is now broken. And as I said before, these lines here, these daily, weekly highs and lows, they can often act as support. Look at how well that rejected price. Tagged once, rejected. Tagged twice, rejected, then hasn't come back to retest. So, you know, this was a higher risk trade. I'm happy to take these trades because I had enough confluence on my side, but ultimately you've got to understand that it's a counter trend play. The targets have got to be shorter. It played out really nicely. Really happy with everything, really. The entry, how I managed the trade, and how I came out of the trade comfortably, knowing that if we are going to be pushing higher based upon this major breaker structure, then the likelihood is that it's going to test here, take the imbalance, and then push up, which it ultimately has done. So guys, thank you for tuning in. I hope that breakdown gave you a lot of information. If you haven't done so already, please make sure you pop me a like to this video and put your comment below with anything that you're struggling with your own trading. I'll answer every question. If you haven't checked this video out next, make sure you do. This is some of my key elements in my trading that make sure that I stay profitable all the time.